All right. So what are we going to be doing today is basically a market analogy, a market analysis on basically what do you do when you're approaching the market, right? The first thing you look for, well, the first thing that I look for, right, to understand is it relative highs, is it relative lows? Basically, the first thing I'm looking for, right? So the first thing I do, right, that I look for in my PD arrays is that I go to the weekly chart, right? I go to the weekly chart. So matter of fact, first let me delete all of my zones. I like to delete all my zones and then redo them because the more I do them, the better I get at it. Right now I can do it, fairly fast. So this is actually 9:30 right here. This gray area. This is 9:30 to 12. Right. So the first thing I want to do is I go to a weekly chart and I look at where we at right now. Like, what the hell? Oh. All right. I go to a weekly chart. So I'm gonna just act like this day is not here, right? I'm gonna just act like this day is not here, right? So the first thing I do, I go to a weekly chart. I find the high and the low of the week, and I notate it. So this will be the weekly highs. Remember, I'm imagining like this last week, this week's bullish candle is not there, right? So this candle is not here. So this is the high. So this is the week high, weekly high. And I go and get the weekly low, right? Weekly low, and I notate it. You want to notate it because when you get on a smaller time frame level, you want to make sure you understand where are you, right? Because when you break different zones, when you break different levels, you want to know where is it approaching, right? So you can be able to take the right type of trades. That's the first thing I do. I find the weekly high, weekly low. The next thing I do, I look for something that's called a new week opening gap, right? Just like a fair value gap, right? You see this fair value gap right here where it's from a 3 candlestick pattern to where the first wick and the third wick do not touch and it leaves a gap like this. It leaves a gap like that. See that gap? So this will be a regular fair value gap, right? But I look for a new week opening gap, right? So unlike the wicks, it's from the bodies of the candlestick, right? So I'm gonna look right here. So you see this gap right here? You see how it's a gap between the close and the open? That's a new week gap. So I'm gonna notate that. And then I'm gonna extend it. And I'm gonna notate it. New week opening gap. Wow. Right. And then I look anywhere else. Is there any other gaps? There's one right here. So because look, this bullish candle closed right here and it opened up here, leaving a gap between between the close of this week and the open of this week. Right? These are the key levels, key PD arrays that I look for. New week opening gap. And I do this every day. Now, I go to the daily chart. Once I get a couple, I don't want too much. I want to get it to if price is over here, I want to get it like the closest to price, right? Because you don't want to just be doing all of them because price may not even go down there, right? So, like I said, if you're listening live on YouTube right now, you can't see it, right? But when I post it, you'll be able to see it, right? So now I go to the daily chart. Go to the daily chart and I do the same thing. I look for new day opening gaps, right? Remember, so this day right here, let's act like it's not here because this is this whole week, right? So I'm acting like it's not here for the moment because I'm going to do the analysis on how I start for the day. So there's no new week opening gaps, right? But what they are, but this is the yesterday's high. So this is a daily high. A daily high. And then this is the daily low because this is a daily candle. So I got a daily high and I got a daily low. Now, matter of fact, you see how this is a new day opening gap right here. So you see how this bullish daily candle closed here, this opened up here, leaving a gap. A new day opening gap. New day opening gap. Bam. That's enough. Now I go to the 15-minute chart. Right? I go to the 15-minute chart. And now and this is how I'm forming my bias. I'm forming my actual analysis before I start the market. That's why it's important. The market open at 9:30. It's important to get there an hour, 45 minutes early to form your analysis. Right? He said you can't see nothing. Fuck that. I'm gonna flip the camera for y'all right quick. Let me flip the camera. Alright. There you go. Alright. If y'all come in now on live, y'all can be able to see it now. So now I'm seeing what's going on. I'm seeing that we're actually bullish. Why are we bullish? Because why? We keep making higher highs, right? We keep making higher highs, right? We keep making higher highs. So that means we're bullish, right? Cool. Go right down to the 1 minute. So this is where we're going to do our market analysis, right? So let's just chart before there, right? So I see that. So let's zoom in. So market open. Remember, the first thing I'm looking for, right, is my first PD rate, now that I'm in here at 9:30, is the first presented fair value gap, right? The first presented fair value gap, right, is basically the first, exactly what it says, the first presented fair value gap, but it's after 9:30. So let's zoom in, right, to market open. So this candle right here is a 9:30 candle, right? So I'm looking for the first presented fair value gap. We got that right here. So let's notate that. So first presented FVG. Right? That's the first thing I'm looking for. Now, let's see what happened after that. Right? We just gonna go through price. Market open right here. Bullish candle came up bearish. So the first bearish candle I'm seeing, this is reading straight order flow, right? We have two bullish candles, right? So I see that's going up. Okay. You see how there's relative highs up here? So this might be the draw, basically on where you're expecting price to go. Right? Because why? It just came from over here. It was right here, and then it bounced up pre-market. So if you look at pre-market, look at it. Last time it was right here, it just rallied up. So the fact that it's down here and then it swept. So another thing, it swept these lows. So at lows and highs, at every low and every high, there's liquidity. Basically money. Right? So we see that at 925, it came down, swept these lows. Right? Matter of fact, it was double lows. Look at these double lows right here. The market loves to come and just take the liquidity and head the opposite way. Right? So let's zoom in some more. So right now you're bullish. So look what happens. This is just straight order flow. Bullish candle, we get one bearish candle. So now if I'm bullish, right, this is the narrative. This is how you paint the picture. If I'm bullish, I'm expecting bearish candles to support price higher. Which means if you understand support and resistance, support is the floor, which is support. It should bounce at the support. So if I'm saying this bearish candle should hold as support, I'm expecting it to bounce here. So if I'm bullish, I'm expecting bearish candles should hold as support. That's just what I'm going as, right? So one thing about the order block, one thing I know, after a sweep, you're looking for, so let's just do it for real. So look, we get a sweep, of liquidity at 925. Then we get a rally up. So that's an order block. We have these 3 down close candles and an aggressive move up. Order block. So let's draw the order block. And let's notate it. Order block. And this is a 1 minute chart, by the way. So we got the order block. Did it leave a fair value gap? No, there's no fair value gap, right? Cool. Because every order block is not going to be coupled with a fair value gap. But and when they don't be a fair value gap, you got to understand, okay, there's not a fair value gap. How do I know if this is a valid order block? You have to know how to read order flow, just like I'm about to explain to you right now. So we know this is the order block. The most sensitive part of the order block is the top wick. There's no real wick, so the most sensitive part of the order block is just this first candle, right? Mean threshold of the candle is basically 50%, right? 50% of the range. And if you're on YouTube listening, if you got any questions, just comment below, and I'll answer as I go. So if you use your fib, you draw from the high to the low of the order block. We have our fib extension, fib retracements. So we see that it closed up here. So so the fact that it closed up here, I'm waiting for price to get into, to dig into this candle right here, which is the most sensitive part of the order block, to see if it's extremely bullish or not. Because if we're not extremely bullish, it's going to dig deep. It's going to dig deep in here. It's going to do this. It's going to close up here, and it's going to come down here, and it's going to start closing in. Remember, we don't want to see, if you're bullish, you don't want to see closes below mean threshold, right? You don't want to see no closes below equilibrium of the order block, which is here. You will allow it to trade in here. And remember, you can let the wicks, if it's wicks, it's okay, but the bodies, watch the bodies, right? So now, it closed up here. This bullish candle came down. So look, it came down. Look where it stopped at. It stopped right here at the 78.6 mark. It didn't even have the willingness to come down to the mean threshold. One sign of it's bullish. The next candle, bearish candle. Remember, if you're bearish, you're expecting price to push price higher to hold that support. If this wasn't confirmation for you, came back, closed above here, the next bearish candle, it opened up here, went all the way down. So this candle, this bearish candle, dug deep into the order block. Did it have enough strength? Did it have the willingness to come down to the mean threshold of the order block? No, it didn't. Showing signs of it's heavy. It's extremely bullish. Right? Displaced up. And it's coupled with a breaker. Right? Look at the breaker. This is entries. A breaker is low, high, lower low, higher high. Right? The most important part of the breaker is the top candle. So if you just extend it all the way through, you will see that after it closed above, it came in. So you have a breaker, low, high, lower, low, higher, high, after a sweep, which is exactly what you're looking for. And you have the order block with the, you know what I'm saying? You have so many confluences coupled with these relative highs right here, which is the market loves to hunt when this is super smooth, right? This is super smooth, right? The market loves to come up here and to do this, make it look crazy. Just like this. This was super smooth. Market open and needs to come and just wick down, take all of the liquidity that was here, right? So it basically manipulated lower to displace higher, right? Which is the power of 3. So we have, anyways, now we have, remember, above this zone, I ain't got to worry about down here. Above this zone, we see this bearish candle, which is another order block. The most sensitive part of the order block is right there, from the high wick to the open, right? Remember, when you have an order block on top of another order block, it's use it as an accelerator. It's time for speed. It should run in a hurry, right? An order block on top of another order block is a propulsion block, and this propulsion block should be used as an accelerant, and it should just run through price, just how you see it, real fast, right? Now, remember, if we're bullish, you're expecting bearish candles to be hold as support. Same thing like this. If this is the order block, you will grab your fib retracements from high to the low, right? So now, we see here that, now, this will get tricky yet. So, if you're in this trade and you see this, remember, this was a big bearish candle at one point, right? But remember, like we said, the wicks do the damage, the bodies tell the story, right? So, if you're in this trade still, and remember, if it's the new order block, you don't want no candlestick closes below mean threshold, which is the 50% range, right? You don't want no candlestick closes underneath these ranges. Look what happened. Closed above, solidified the order block, came back down, wicked it to take people's stop, because some people like to pull their stops right here. Would have took you out, then ran up higher. Do you see any candlesticks closures below this level? No, you only see one wick. Right? You only see one wick, showing it's still valid. And it didn't take this low of the order block, showing that it's still heavy. Look what happens after that. Displacement finally creates the first presented fair value gap right here. Use it as support, and then it takes this level. Remember, when it takes a high, so now let me erase all these zones, make it a little more cleaner. We already broke that down. I'm gonna leave this, but I might delete that too. So now we're here. This is the first fair value gap that gets presented after 9:30. There's no fair value gaps here, right? It's only just straight order flow, bullish order block coupled with the breaker after the sweep, stuff like that. Now we got right here, we got another order block right here. Look at this, one down. On a higher time frame, this is so sweet. So look at this. Bow, you got the fair value gap right here. It's a tiny one. Look at that, rally. But remember, this is a high. If you're expecting it to be more, if you're expecting it to keep going higher, you want it to give you reasons that it want to go higher, right? But look what happened. So look, it swept the highs, but you see what happened? As it's sweeping the highs, look what it created on the way up. Look what it created on the way up. It created order blocks. So basically support on the way up. So after it takes the high, it come back, rebalance, bounce at an inefficiency, creates another order block, and rallies up. This is what you want to see after it sweep liquidity, right? You don't want to see it come all the way back into this range. Now it might be time for reversal. But if you see it take liquidity, come back, start bouncing, remember, using bearish candles as support to rally higher. Look what happened. We rallied all the way up, right? So now, after it rallies up, look how much it rallied up. Let's just say you was down. Let's just say you caught in this one. Let's say you caught from here. It went up 80 points. Look at the risk to reward. You put your stop right below this order block right here. You've been risking 11 points. Look at the risk to reward. A 7.2R trade, which means is you're risking 11 points. Basically $22 if you're trading one macro. If you're trading one macro, each point is $2. Each tick is 50 cents. Right? You're risking $22, which is 11 points to make 83 points. You've been risking $22 to make around 83 times 2. Let's say 80 times 2, 160. You've been risking $22 to make $160. If you would have just let this trade just ride. Right? Now, let's delete all the zones after that. So now it's up here. Now, did it sweep any liquidity? Let's see if it's sweeping liquidity. Let's go to a 5 minute. It's a higher time frame. Oh, this was all-time highs. So this is all-time highs. Matter of fact, go to a daily chart. 1 day. Yep. So it swept basically all-time highs. So look what happened. So now let's go back. So now I know it's at all-time highs. You want to wait for price action to give you more indications on where it want to go, because there's no more highs. There's no more analysis above, right? So let's see what happens. It keeps just rallying, creating a whole bunch of just unmitigated fair value gaps, right? Whole bunch of inefficiencies. Eventually, you got to come back. So it stops, eventually comes down. This place lower, comes up. So we see the order block. So let's just go with these two. Two bullish candles, a displacement lower, right? A potential order block. How do we know if it's valid? Well, you grab your fib to the high. You grab your fib, you mark from the high to the low, right? And remember, you will allow the wicks to do the damage, but the bodies tell the story. The wicks is way up here, but look where the bodies are. And key thing, did it take this rejection block right here? Did it take this high, which is the initial order block? I don't use this one because you can use this one, but I like to just, I like to just make sure I'm using the right ones, right? So I'm allowing price action to tell me if it's this the right one or not. You can't use this one because look what happened. Anyway, let's use this one. So you'll grab your fib, drop from the high to the low. Especially you ain't see it take this high, displace lower. So now, right? Displace lower, create another order block, right? None of this, it just keeps displacing lower. But you see what happens. It eventually bounces. Look where it so happens to bounce at this order block right here. Wait, right here. So right here. Well, I'm sorry, this fair value gap right here. Look at that. So we got a bounce. Remember, price does four things at all times. It generates the highs, it hunts the highs, it rebalances to inefficiency, and it rebalances to equilibrium. All of this is being generated, right? Generated, hunt inefficiencies, rebalance, right? Came back. If you would have left your stop here, you would have never got stopped out. But if you start dragging your stop lower and lower, you know it's going to retrace. You got to know where to put your stop. That's the key with trading. And after that, look what happens after that. And then look what happened. It used this same zone right here as an inverse. Coupled with the order block. Look. We got all this consolidation at an area where we're expecting it to reject from. Drop lower. You can use this right here. Look at that. Displacement lower. Look at that. Order block, fair value gap, displacement lower. It tapped right into the lower half. Remember, if I'm bearish, right, now I want bullish candles to support price lower. So just how bullish, you see how it's supporting price lower? This is a bullish candle. You see how it's supporting price lower, like it's support. So you got support and support. Right? And then just straight displacement lower. Exactly what you want to see if you was bearish. Sweeping all the lows. But then what happened? Look what happened. It came back. So this is how I've been able to actually win a lot more trades, lose less, and actually become the person that do this. That can actually, because I can't cash out. I still cannot cash out every single week, right? With real money, right? So I'm just focusing on how to become better every day, right? Doing the right things, which is not over leveraging, not chasing losers, right? I have a whole, deleted it. I got a whole things what I gotta do and not do, right? But as long as I'm following my rules, as long as I'm not over trading, as long as I'm not the fear of missing out, that FOMO. I've blown so many accounts because of FOMO, right? So it's just all about becoming the person who can do it, so you can have whatever you're striving to chase, right? And we're trying to become profitable in these markets. So we have to actually take the right trades, become better, and just keep on doing the things, right? Doing the right things, right? It's not about over trading. It's not about over leveraging. Build your account up, create good discipline, create good habits, and learn these strategies, right? I have a free Discord where I trade live every day, right? The Discord handle is Casino Trades. That's the handle. And you can follow me on Instagram at Casino Trades. You can follow me on Twitter at Casino Trades. Just make sure you do not get scammed, because it's a lot of scammers out here, right? So what you do is you follow me on Instagram. I follow around 5,000 people. Well, and I'm only following 5 people, right? I would never DM you how to make money and stuff like that. So follow me on Instagram at Casino Trades, KasinoTradez, right? Casino, but with a K, right? And then DM me that you're trying to learn, whatever you're trying to learn. And like I said, if you like this, please comment below, like it. You don't gotta subscribe. You could just like it and comment anything, because the more you guys comment, the more they will push the channel. And it's all about understanding. Remember, I'm here to help. I'm here to teach y'all, because I'm here to actually get better at communicating, getting better with the concepts, and showing my journey. I'm just showing my journey. Why wait till I'm Mr. Profitability to start making the channel, to start doing all these things? I'm doing it now. And I'm teaching things that I know. I'm not teaching things that I kind of like don't know. And if I'm wrong, right? If I'm wrong, you can easily be like, yo, that's not wrong. I mean, that's wrong. And then me and you, we can analyze it to see who's right and wrong. Because if I'm wrong, I'm doing you a disservice. And then if I know you're right, I'm learning, right? I can learn. I'm here to learn also. See what I'm saying? So I don't know everything, right? But anyways, I'll leave y'all with that, man. Just keep on learning, man. Just keep on learning. And if you got some good content on this video, on any of my videos, just like and comment whatever you want to comment. It don't even matter. So this is Friday's trading. This was Thursday's trading. 9:30 to 12. So you see the range. This is all money. This is money. This is money all day long. So I'm saying, but anyway, let me get up out of here. Appreciate y'all for tuning in, and become the person who can do this, so we can, right, pull money out of these markets every single day. Be, do, have. Let's get it.